Welcome to Market Makers, everyone. Hope you guys had a fantastic weekend. A little bit of a boring Super Bowl. The markets have been both boring and volatile at the same time. It depends what you trade because crypto, as you guys know, fell apart. Yet you have the Dow, the Russell, breaking out to new all-time highs. A little bit of a bifurcated market. We need to go over the cycle, go over the key levels in both the markets and in cryptos that you have to pay attention to because this next 4 to 6 weeks, very important in the marketplace. We're coming up to a cardinal point in the market. Guys, if you want to join us and be a Market Maker member, check out the join button right there on YouTube. Different membership levels you can join. Be sure to like and subscribe to the channel. Click the hype button if you like these videos. It helps me out. And these videos, as always, are brought to you by SimpleFX to trade all of the markets globally. If you live outside the USA and Canada, check out SimpleFX, be a Market Makers VIP. If you want to trade the cryptos, you don't want to do KYC, you just want to trade with an email, then check out Bitunix. Been with both of them for a long time. I think you will enjoy their services. Let's talk about what's going on right now because many of you are familiar with Dow theory. Oh, by the way, everything's timestamped below, but I would listen to this first part of the video because it heavily affects cryptos. But many of you are familiar with Dow theory. Dow theory, one of the metrics to gauge what type of market you're in, bullish or bearish, you use the Dow Jones Industrials. Are they breaking out? And yes, you made a new all-time high just on Friday, right? Made another new intraday all-time high today. So you have the Dow theory showing the Dow Jones Industrials breaking out to the upside. I have 50,500 as the next key level. You're at 50,200. Above that, 53,750. So Dow Jones Industrials made a new all-time high. Now, the confirmation for that trend as to whether or not the markets are bullish is to get confirmation from Dow Transports. Dow Transports also at a new all-time high, both on Friday and today. Okay, so you have Dow theory telling you the markets are bullish, yet not all the markets are behaving equally. So we're going to delve into this a little bit. The VIX is down here at 17, selling back off. Again, not at the base levels that you've been at, but still, relatively a suppressed VIX. So let's look at what's happening right now in the ES because the 2025 target was hit. This is the largest market in the world. We hit 7,000 back on December 26th. So the 2025 target was hit for the bull case. Max bull case, 7,500. I think the S&P wants to try for that 7,500. Couple of different reasons. But when we look at historical topping patterns here in this cycle, which started back in the pandemic, third week of February is a key date, okay? Third week of February, right before the pandemic, we make a top, we drop 36%. And then we have over here, right before the tariff sell-off, we make a top, third week of February, like a day apart. We make that top, and then we drop 21%. Third week of February is coming up. If we can surpass the third week of February, then you have to look at the spring equinox, which historically has been another major time to top in this cycle for large retracements. But I want to show you what I'm looking at here on the S&P. 7,000, you're at 69.84. We just have not been able to break down yet. We're going to zoom into this. But if we can continue to hold the key support levels, much like my Bitcoin TA, we needed to hold the 80K. We didn't hold it, so we cratered. But we're going to look at the key support levels. But if we continue to hold it, we could be breaking out to the higher level towards 7,500. And again, maybe you split the baby, 7,250. And then I think you're going to get a larger retracement. That should take you back down to about 6150, throwing you back to that peak from February 2025. Right about there, okay? Why do I say that? Because all of these big retracements have been a throwback. If we start back at the pandemic, look at the pandemic peak and then the pandemic sell-off, we then came up to a peak over here back in 2022, right? Where did this retracement take us? It took us to a throwback of the pandemic high. Where did the next leg take us? We then went up in 2022. We had the peak right before the tariffs. We did a throwback right to the 2022 high. Ergo, if we push up to 7,500, I think we're getting a throwback right to the tariff high. So right around 61.66. If we start cratering from where we are now, you could go down a couple hundred extra points. So anywhere between 5,800, 5,900. But I want to see if we get this breakout to the upside. Market symmetry would be a very beautiful thing. One other case in point, I want to point this out to you. I've been telling members this, but to point this out to you, symmetrical moves in the largest market in the world are very important. What was the pandemic retracement? 1,200 points. What was the 2022 retracement? 1,300 points. What was the tariff derangement sell-off retracement? 1,300 points. Do you know what the retracement would be if we come up to 7,500, throw back to that 6,150? You guessed it, 1,300 points. I'll just show you right here. 1,300 points would take you right back to that 6,150. Symmetrical moves in the marketplace. Does this mean it has to do that? No. But it does make it substantially easier to trade if it does do that. Also, from a fractal wave perspective, you have a very nice harmonic 5-wave pattern here, marking all the largest retracements. Wave 4, wave 5, with symmetrical retracement levels in between, which is why I am watching this. Now, overall, guys, longer term meaning the rest of the decade, you already know this. I've made many videos on this. The 2020s is the 1920s. Or another way to look at it, another fractal decade, decennial cycle you could look at is the 1990s. So I believe you're going to see higher prices. I am not looking for a 50, 60, 70, 80% meltdown that a lot of people on videos are looking for. I think you're going to see acceleration in prices after the next sell-off once again. Though, if you look at the 1990s, for instance, December 5th, 1996, Alan Greenspan gives a speech about irrational exuberance in the marketplace. Do you know what the NASDAQ did in the next 3 trading years? Peaking in March of 2000, the NASDAQ went up like 216%. It doubled in the next 3 trading years. That's the bubble. If you guys have been watching my channel and you looked at my metal TA, you saw the parabolic moves, right? When it goes like that, that's the bubble when it goes like that. As a matter of fact, I think by the end of the decade, we're going to be looking at 10,000 on the S&P. Okay, so looking for a large retracement potentially, but I'm also looking to see if we break out to get the 7,500, get the market symmetry with the move back down to 6,150, and guess what's going on after that? I think you're going back up again, okay? 2026, year 6 in a decennial cycle. We could have as many as 2 retracements, maybe a 10% and maybe a 15 to 20%. Looking at 1,300 points, 1,200, 1,300 points for the larger retracement. So it's all about whether or not we can break out to that 7,500 level. Then we look for a top, then we look for a drop. And from a timing perspective, third week of February, going into the spring equinox is an important time to see if we get follow through and then a top and then a throwback drop, giving you that symmetrical move in the marketplace. If we go forward, when you look at the S&P here, look at the 54 RMA, beautiful hit off the 54 and beautiful hit once again off the 54 RMA for that retracement. Key thing is here, guys, when I talk about TA, you have to hold the lows, right? So right now we are in an obvious uptrend. I mean, this should be obvious to everybody you're in an uptrend. Here's your tariff sell-off. When we did this rebound, Paul Tudor Jones, other billionaires, Wall Street was saying, don't buy the dip yet. Don't buy it. It's going to go deeper. You had people making this is the crash, 50% down videos, right? This is where I told you was an excellent buying opportunity for a God candle, major rally up, which is what you got on that candle, formed a perfect W fractal to go up to the upside for the strongest turnaround rally in stock market history. As a matter of fact, people say the S&P, well, it finished up 14, 15% on the year. That's really disingenuous because had you bought the low in the S&P, it finished up 45%, almost 46% off the low. Basically, you got 3 years of returns in less than 1 year just by understanding key principles and technical analysis. So another key principle is holding supports, breaking resistance. For this uptrend to no longer be an uptrend, you have to take out the 50 RMA RMA, which is right there at 67.71. The S&P would need to break down, ultimately take out this low of 65.25. Then the uptrend is broken. Okay, so until that happens, you are in an uptrend. Right now, you're in a line, you're in a sideways market, a Wyckoff fractal, a fractal corridor, many different names for it, but you're going sideways, hitting your head on key resistance. The question is, can you break out, hold that as support, and break out towards 7,500? And that question is unanswered because you haven't been able to do it. Back on January 26th, you put in yet again another new all-time high. Key thing is you're still holding key support levels. You're still holding the low from December, okay? So you're still holding your low. You rebounded off the 54, and you're still well above that November sell-off right here, which everybody once again told you was going to crater the market. So everything looks okay. You're just going sideways, grinding, buying time. You're bullish above 67.50 and above 65.25. This would be the first level to really start paying attention. If you start failing here and then breaking down, then you have changed your uptrend. So until that happens, my bias is for more upside towards 7,500. You look at this on NASDAQ futures here on NQ. What's the difference here? Here's your tariff sell-off low. Beautiful W recovery fractal, right? This is when I was talking about longing Tesla as well. And this is what you're looking at. You are still in a bullish market in the NASDAQ, okay? It's going sideways. It has formed a line. It has formed a fractal corridor. We hit our target for 2025, which was 25,941. We hit that target multiple times, exceeded that target, and then we got within 50 points of a new all-time high, and guess what? We retraced again. We took out the 50 RMA. We came down to the 90 RMA. You still held your low over here from November. The NASDAQ has not been as bullish. Those of you that track the markets know, you look at the software sector, those companies are getting brutalized, a lot more volatility in the NASDAQ, but you're still in a bullish market, okay? When is it not bullish? Take out 24K. If you roll down and take out 24K, then you have broken the uptrend. The uptrend is intact until a key support level is wiped out from the uptrend, and you haven't done that. Since then, you're just going sideways in a range. All the way up here at 26, so far, all the way back down to 24.2. You got to get below 24 to break the market down. If not, then I'm looking for this market as well to potentially break out and come to my next level target, which is 28.2. That's where we are. Right now, you're holding key support. You're in a bullish uptrend in a sideways market. You have to break 24K to be more bearish on this market. You look at the Russell. This is beta tech, right? You look at the Russell. The Russell is 50 points away from a new all-time high. 50 points away from a new all-time high. Clear bullish uptrend when you look at the Russell. You have your tariff sell-off low. You have multiple highs, multiple higher lows, key high here, key higher low. I did it again here, did it again here. You're just going up in levels. I have a target here on the Russell of 29.51, which is about 300 points higher than you are now. Eventually, all these markets are going to top and retrace. It's just a question of, is the Russell squeezing out to 3,000? Is the S&P going to 7,500 before they get the next retracement? That's the question. Let's go ahead and jump over to crypto. Now we look at crypto, look at the fear. So markets are in neutral, crypto's still in extreme fear, and for good reason, because crypto's had a major sell-off. Now, if we look at Bitcoin here on the chart, everybody asking about the beach ball chart, is it still valid? Well, let's look at a couple of key things on the beach ball chart, because this is interesting, right? We all know that Bitcoin's only existed since like 08, 09. So the beach ball chart has worked going back to the 2013 cycle, which again, not a long history. Last two cycles in particular, it worked absolutely beautiful. When the line crosses the beach ball, within 4 to 6 weeks, you had the top. This worked out in 2017. This worked out in 2021. And then, of course, you had the big drops, averaging around 75%, right? So you got these big drops. So what happened this time? Well, the line still hasn't crossed 69K, the previous cycle high from over here in 2021. So we haven't actually triggered the beach ball chart yet. But again, that doesn't mean that this indicator is going to even work. It worked the previous two iterations. obviously we've had a big capitulation event in Bitcoin. And right now we are just like, let me look at the line. If we look at the RMA, we're at 66,344. It would have to go up another 3,000 points to technically trigger for a top. So Bitcoin could have sold off faster. The line didn't work this time. The beach ball chart didn't work. I don't know. I don't know yet, because it's obviously unlikely to rally up to a new all-time high from 70K to get above 126 in the amount of time that it would take to go 3,000 points, right? So unlikely unless you have some major rally happen. So it looks like this may have failed. Again, I say may because we haven't actually crossed the line yet. If Bitcoin capitulates further down, which we're going to talk about in the next chart, if it capitulates further down, the moving average is going to turn down. It's not going to go up. It's going to turn down. It only went up about 30 or 40 points since last week because of the price of Bitcoin. So technically it hasn't triggered yet. So technically there's not a top yet. And obviously if it does trigger and Bitcoin's down here somewhere, then it didn't work out for capturing an all-time high. So we'll see how it plays out. The interesting thing about my Bitcoin top and bottom chart, we've been focusing on the tops for so long, as you guys know, 204 bars between 2013 top, 2017, 204 bars between 2021 top and I just said that backwards. So 204 bars between 2017 and 2021 and 204 bars between 2025 and 2021. So identical to the day, 1,428 days on both of these, right? Now, if we have this, when you see people talking about when will Bitcoin bottom, they're just looking at the previous fractal cycle as well for that, right? So if we repeat the exact same bottoming pattern, just like we did on the top here, 204, 204, you'd be looking at a November 2nd, 2026 bottom. That would be the symmetrical move from the previous bottom. Doesn't mean it's going to happen. No, but that would just be the move. But you're seeing a lot of people say it like it's a fact, right? Nobody knows about the exact tops and bottoms until after they happen, and then everybody claims credit for it. But that's just how it is, right? So I want to show you on this chart, Bren theory. We talked about Dow theory. And Bren theory related to the crypto market here. The market has to confirm the crypto move. And this is an important concept to understand, because if you understand the relationship between markets and cryptos, it can make you a better trader, it can make you a better forecaster, and it can give you another element here of how you look at the markets. Let's just look at this. You should start off with the pandemic real quick. This is a NASDAQ in neon green, Bitcoin in white. They both confirmed each other, right? Bitcoin sold off in the pandemic, NASDAQ sold off in the pandemic. They had divergence in 2021. Okay, the NASDAQ went down about 8% here. Bitcoin went down about 50%. And then what did Bitcoin do? The NASDAQ kept going up, made an all-time high, so Bitcoin recovered and then put in the final all-time high. When you look at how 2021 played out, Bitcoin topped in mid-November. The NASDAQ topped about 2 weeks later. They confirmed each other. Bitcoin went down, NASDAQ went down. They both rallied up. They both went down again. It's confirmation. Bren theory is the market has to confirm the crypto market. You see it in the recovery, Bitcoin up, markets up. You see it in the various retracements, NASDAQ down, Bitcoin down. And of course, you saw at the tariff sell-off as well. Bitcoin topped just about in January 2025. The NASDAQ topped just a few weeks later in February, and then they both went down for the tariff sell-off. But look what's happened where we are right now. This is what's interesting. Where we are right now. The NASDAQ had a 9% retracement. 9%. Bitcoin went down 36%, basically a 4x. Then the NASDAQ went back up, almost made a new all-time high within 50 points. Bitcoin did that move, right? It went from, it was basically an 18,000 point rally from 80K up to 98. And then the NASDAQ retraced 8%. Bitcoin went down another 39%. So 36%, 39%. The NASDAQ is still chopping up and down. It has not confirmed the move yet. So one way to think of this is Bitcoin could just be chopping around. Maybe it tries to make a rally back up to like an 85, 86K level, get hung up in these fractals. And then when the NASDAQ, whether it rolls over, doesn't make a new all-time high, or comes up for a slightly higher high here, a couple thousand points, then rolls over, that could be your confirmation in the market. That's just one way to think of it. Another way to think of it, if you're super bullish, is, you know what? I think all the markets are going up until whenever. Insert a date, the summertime, whatever. So this is just interesting because you don't have confirmation yet in the marketplace. Bitcoin front ran by the largest time frame in this whole cycle. Typically, they've been topping within 2 to 6 weeks of each other, 2 to 4 weeks of each other, and we're at 4 months. Bitcoin topped almost exactly, what's today's date? Bitcoin topped almost exactly 4 months. Tomorrow it'll be 4 months. Whereas the NASDAQ just a few days ago almost made a new all-time high within 50 points on a, on a $26,000 asset on the NASDAQ. So it's just really interesting how it's playing out, $25,000 asset. It's interesting how it's playing out because of this 4-month delay, but I want to zoom in a little bit closer on the fractal. But one thing for sure, if we see the NASDAQ break its trend, it's confirming the market, okay? If it breaks its bullish trend, it's confirming the market. So it's just something to keep in mind. If we look at Bitcoin here on the weekly chart, covered this with you last video. Obviously, we had the George Lindsay pattern, saw this playing out, gave you guys this pattern over a year ago, 3 peaks and a domed house. We had this pattern, very shitty symmetry here on that right shoulder. Just got up to the 382 retracement, barely qualifying, was looking for a move to 108, but you lost key support. You lost 80K, you lost the 54 on the weekly. We know that when we went over this last week, you have some patterns here that give you predictions. 52K on an ABC, AB equals CD, also terminates at 52K. I teach these in my education course, available there on YouTube with the join button. So we have 52. We didn't get down to 52. We basically went to 56, 59.9. We went to 56. So when I'm looking at this from a fractal perspective, a couple of things I want to show you guys I think is interesting. Hopefully you guys will think this is interesting too. But we have our 54 weekly, right? Look back in 2022. What do? We sold off to it, right? Sold off to it, bounced off of it, got a rebound, and ultimately capitulated on it. And you can see that. We did the same thing, all-time highs, sold off to the 54 RMA, rebounded off of it, and then capitulated off of it. So where would we be if this was a fractal for fractal symmetrical decline that we're doing? We would be right here, right at this level where we got the next rebound, right? That's where we are right now. So let me show you what that looks like using an RMA. We can go to the 108 RMA. Look at the 108. It's easier to envision for some people, have a visual aid here. If we look at the 108, keep doing that. We look at the 108, what do we do here? We hit the 108, knife just below it, rebounded back off it. You see that? What do we do over here? We hit the 108, knife below it, rebounded back off of it. So the question is, that everybody's wondering, right, whether you're bullish or bearish, the question is, do we still get this? Do we take out the 108, get that final drop? Do we take out the 108 and get a final drop, right? That's the question. Well, let's just look at some timing here on these fractals. We look at the timing, covered this previously, but this sideways fractal where we bounce off the 50 weekly RMA, 63 days, right? You went sideways, you had a rally, you peaked on the 63rd day, 9 bars, you capitulated, then you bounced off the 108. Did the same thing over here. We went up 56 days, okay? So we got a big rally, 18,000 points, 17,500 points, 8 bars, 56 days. 9 bars, 63, 856, level change. Where did you level change to? 108 RMA. You had 9 bars, 63, level change. Where did you level change to? 108 RMA. That's where I think we are, is that little fractal right there. And let's just look at this, because if we measure that low up to the high, then go over to this bar, how long were we going sideways before we lost the 108 RMA? 28 days. On the next bar, the 5th bar is the 5th bar that cut through the 108 RMA. So we came for 28 days going sideways up and down in a range. And right now you are at 7 days, okay? So when you start looking at this from a timing perspective, 7 days, if we go out to 28 days, this is a weekly time frame, you're looking at March 2nd with that 5th bar. March 9th was the bar that knifed through the 108 RMA. What was that final decline? From the high, bouncing off the 108 to the low, it's another 52%. if it does that type of move. We don't know where the high is going to be, right? Because we're just on the first bar. But if we just took it from where we are now and came down to be substantially lower number, if you repeat it, that type of drop, which again, there's no reason to think you'd go down another 50% from this move. But that would be, you know, interesting. Where I think this move will go is what I've been saying is this key fractal corridor right here, right? So we landed right in the middle of this. We almost came down to the 618 at 57. We have pattern targets at 52. If we want to look at this from another RMA perspective, just to remove some bias of patterns and things out of this that the human eye sees, let's just look at what the moving trend lines see, which again is your moving averages. So let's just look at the moving trend lines. Moving trend lines, let's throw 200 RMA on here, 216, right? Geometric numbers. In 2020, you hit the 216. You hit it again. You got 1,000 or 2,000 points below it here in the final sell-off. And this right now is just about 46, 47K on the 216. So what would that drop be? Again, we don't know the top because this is the first bar. This could come up. This could come up substantially. We don't know the drop. But just want to measure from where it's at now. It's another 33, 34%. Puts you right back down into the baseline of this area, 49K. So again, you're just looking at that 47, 49, 52. That would be the next flush out. So what's key here is what happens to Bitcoin over the next 28 days. Because over here, you went sideways 28 days, and on that next bar, that fifth weekly bar, boom, level change down. So we want to see if we're going to finish this move or if this move's going to start to hold. What it looks like to me is what I was saying. What it looks like to me is the markets have some more time to rally. Once they top out and they start to retrace, wherever Bitcoin is, whether it's at this level here at 70K, or it's up retesting the base up here, 85, 86K, getting hung up, that could be the next move down. I don't know, right? We only have one bar. We're going to look at Bitcoin zoomed in here. Or this is ETH. But if we look at Bitcoin zoomed in, let's go to a daily. You don't have, I mean, you have a great rebound off of the 59 going up to 70, what, 72. And you're just going sideways now on the daily bars here. You just got bars stacking sideways. You could break out to the upside. If you were to break out to the upside, you'd have to watch this level right here. Let me get rid of this line. This level where you fell from is going to be your next key resistance point, right around this area, right around that 84, 85K. It's going to be your next key resistance point because all of these candles are going to be acting as resistance. And right now you're just stacking candles day by day sideways. The last 3 days now have just been sideways price action candles. We look at Ethereum. Ethereum came right down to that pattern target. Told you guys to watch 1750. We came down to that 1750 area, right around 1741. And now we're back up at 2128 from that pattern target. Where's Ethereum's strongest resistance going to be? If it was to continue to rise, it's going to be right up here in that area around 2800. Your next level down as well, just looking at this from a fractal perspective, is going to be where the sell-off really started to cascade. You have 2400 right around here, 2450. So you have some levels, and Ethereum can move around. And this is what you want to watch on Bitcoin is how much sideways action do we get before Bitcoin makes a decision. If we get that 28 to 35 days, then you want to see where these levels get to and just be cognizant of what's happening in the markets, because if the markets are topping, you're going to see the markets retrace. And obviously, if the markets sell off, we have Brent theory confirmation as well. You're probably going to see that final flush out in Bitcoin occur, okay? So that's how I'm kind of putting the pieces of the market together. You want to hold 1800 on Ethereum, and obviously your Bitcoin low you want to hold as well. That was a key low, a key sell-off low, 59.9. And so that's where I'm looking at on those. If we look at 3-day total chart, we went all the way down to the 618 at 2.08 trillion. Above you is 2.5 trillion. It's going to be resistance. And then just like on Ethereum and Bitcoin where you sold off from, 2.8 trillion is going to be your next level of resistance. So you want to watch all those levels. You look at USDT dominance. If you look at this, we came right up to the 2022 highs, right? We went a 90% retrace, 8.9. That's where we retraced to. Almost got up to the 2022 highs, and now you're back down at 7.72. We could see, like I said, you could see some volatility. Remember, when you're looking at fractals and you're thinking about history, it's not that they match one for one. Sometimes they do, right? Sometimes they do. But oftentimes history rhymes. So you just want to be cognizant of that as you're watching the markets. The markets break out, look for Bitcoin and Ethereum and the cryptos to try to bounce and hold some level, but always be aware of the cyclical timing. We had that key pattern end up playing out 63 days from the prior sell-off, 57 days on this sell-off, and now we're at the next level, bouncing off the 108 RMA. So keep that in the back of your mind when you're deciding whether or not you're bullish or bearish. We got to see more progress to the upside, and you have to hold the lows. See you guys on the next one.